Welcome everyone to today's webinar, TCFD for Finance Professionals, presented by A4S, Accounting for Sustainability in Ceres. I'm Brad Sparks, Executive Director for A4S in the US, and I will serve as moderator for today's session as we discuss climate-related disclosures and their particular relevance to the finance community. Before we begin, just a few housekeeping notes. First, please note that this session is being recorded. Second, if you have any questions for the panelists throughout the session, please enter them in the chat box and we'll try to answer as many questions as possible during the Q&A at the end of the session. And then finally, please note that we're excited to have a large audience today and there is the potential for some unexpected bandwidth challenges. If that does happen, the discussion will pause for 30 seconds to allow the bandwidth to readjust. We want to thank you ahead of time for your patience in the event such an issue arises. Now let's get started. We have three fantastic speakers for today's session: Blair Bateson from Ceres, Matt Orsagh from CFA Institute, and Beth Sasfai from Verizon. We'll start with just a quick self-introduction by each of them to tell a little bit about themselves and how they connect to the TCFD. Blair.
Hi, this is Blair Bateson. I'm a senior manager on the company network team at Ceres. So that's the part of Ceres that does direct engagement with primarily our 50 global member companies. And within that team, I am responsible for the financial sector and the oil and gas sector. And I've been doing that for coming up on 3 years. Prior to that, did a number of finance related roles in the oil and gas sector prior to Ceres.
Great, Matt.
Hi, everybody. Matt Orsagh, Senior Director of Capital Markets Policy at CFA Institute. I started working in the governance world about 20 years ago with a little firm GMI, which is now part of MSCI. But about 15 years ago, I came to the CFA Institute after getting my charter and been working on mostly governance to begin with, but that's evolved into ESG things for probably the last 10 years, which has, of course, led me to things like looking at TCFD, climate, and those kind of things.
Great, and joining by phone, Beth.
Hi, my name's Beth Sasfai, and I'm Verizon's Chief ESG Officer. Among other things, I lead a dedicated ESG reporting team that is responsible for Verizon's sustainability reporting, including the TCFD report and our annual ESG report. So my team took the lead on producing that report. I sit in the legal department, and I'm also responsible for corporate governance matters, including producing our proxy statement and providing support to our external reporting and investor relations teams.
Great, thank you. And again, I'm Brad Sparks with A4S. Accounting for Sustainability was founded by the Prince of Wales in 2004 to inspire action by the finance community to build resilient business models in a sustainable economy. TCFD is just one of the areas we focus on, but one that where it really is critical to have involvement by the finance function. Now, while I know many of you would be familiar with the TCFD, we did want to start with just a very short and brief overview to make sure everybody was up to speed. So the TCFD, the Taskforce for Climate-Related Financial Disclosures, was established by the Financial Stability Board in 2015 to develop recommendations for more effective climate-related disclosures. Those were necessary as the FSB recognized that climate change poses significant financial challenges and opportunities, both now and in the future. The task force released its recommendations on the next slide in 2017 and structured them around 4 thematic areas: governance, strategy, risk management, and metrics and targets. These 4 areas are supported by 11 recommended disclosures. Those are noted on the screen. And the TCFD also issued supplemental guidance to help preparers. Now, importantly, the task force recommended that preparers provide such disclosure in mainstream annual financial filings, noting that climate-related issues are or could be material for many organizations. The TCFD disclosures continue to gain traction among investors and regulators around the world, and the recommendations and additional guidance is available on the FSB website, and we'll include a link in the chat box if you'd like to use that for reference if you don't already have familiarity with them. So with that very short introduction and overview, let's get started. We first wanted to go a little bit deeper in understanding the context of climate-related financial disclosures. Blair, I know Ceres has worked for several years with investors and companies on tackling climate-related risk and opportunities. How have approaches and corporate disclosures evolved over time? I think you may be on mute, Blair.
Sorry about that. So thanks, Brad, for the question. As many of you know, Ceres does sit at this nexus of investors and companies when it comes to sustainability issues, of which climate is probably the biggest one that we work on for the most frequently. And what we've seen over the 30 years that Ceres has been in existence is a consistent increase in the number of companies that are disclosing about sustainability and the breadth of that disclosure. I think as the issues have moved into the mainstream, as you mentioned, many companies, they are or could be material. These disclosures have really gotten a lot better. And we have a number of reports that have taken a quantitative look at that. The other thing that we've noticed, being both on the investor side and on the company side, is that the disclosures have become a lot more relevant to investors. I think, in the early days of sustainability reporting, it was kind of tailored more for a general audience. And the disclosures, especially with the advent of TCFD, have become really more tailored to investors, investor needs, and more quantitative. And I think generally that's great. I would say with respect to climate in particular, that means there's been a lot more focus on the risks and opportunities organizations face, and you can see that in the recommendations themselves. And one thing that we've made sure to tell our member companies is that organizations shouldn't lose sight of the climate impact. The risk and opportunity is really to the organization itself is really important, but also the climate impact on society, on communities, you can't lose sight of that. I think would also just say with respect to TCFD in particular, we are starting to get to that tipping point where many large companies have started to disclose in line with the TCFD recommendations, and some regulators are also moving in that direction of recommending that type of disclosure. So, I think if we get to a point where most of the world's biggest companies are looking at that, that's going to create a cascading effect, and we would expect to see even more adoption of the recommendations in the years to come. So I think to that effect, we have a report called Change the Conversation that's also about, how to do this well. And I know I'm going on and on, so I'll just hit 3 things from that really quickly, and we can talk more about them. But getting more of the business involved, that's why we're having this webinar, to help get the finance function involved with the response to TCFD. Historically, in a lot of organizations, it's just been done by sustainability. What to disclose and where to disclose it. So this goes to decision useful information that goes into mainstream financial reports. And then the messenger. I think a lot of times this can be taken a lot differently if it comes from the CEO or CFO as opposed to more of a sustainability person. So let's pause there, but there's a lot there to discuss.
Great, thanks, Blair. And you mentioned these large companies now starting to do this, and some of those leading large companies. One good example is Verizon. Beth, I know y'all recently released your first TCFD report just a few weeks ago. Can you share maybe a few thoughts on your approach in getting started, maybe focused on what worked well and what were some of the challenges?
Sure, I'm happy to do that. So we began really at the beginning. We had to educate ourselves. So we spent a lot of time studying the TCFD guidance and, watching some seminars, and then really scouring the universe of other companies' TCFD reports and climate reporting to try to get our arms around what might work for us. We wanted to get a vision of kind of what would work well for a telecommunications company, what might make sense to us in terms of style, kind of layout and approach. And then really as an initial matter, we had to turn to identifying gaps in our current reporting. So our goal was to identify areas where we thought we could kind of immediately expand our disclosures, things we were already doing, but not really talking about. And then also to identify disclosure opportunities that we could build out over time. So, this involved gathering our disclosures and existing reporting. We pulled, everything we'd done in our CDP report or prior iterations of sustainability reporting and our proxy statement, and then kind of cataloging them under the various TCFD sections of, governance, risk management, strategy, and metrics. And once we did that, we realized pretty quickly that we could disclose a lot more, for example, about our board oversight of climate-related risk and how management communicates those risks to the board. So we also realized we could say more about our risk management processes that focused on the resilience and efficiency of our network. And we had not previously done a scenario analysis that we'd shared publicly either. So, to Blair's point about getting the business involved, building out the disclosure is really a cross-functional collaborative effort. So in order to put the governance section together, my team went through, multiple years of board presentations, minutes, committee materials, charters. For the risk management and strategy piece, we interviewed dozens of subject matter experts across our business. So we talked to people from our network teams, our business continuity planning teams, finance, treasury, regulatory, public policy, strategy, internal audit. You get the idea. And for our scenario analysis, we actually hired a consultant who helped work with us to identify a scenario that might make sense for Verizon and to conduct that analysis. And then from a controls perspective, which I think is challenging when you're doing this for the first time, at the end of the process, we had all of our subject matter experts review and sign off on our relevant statements in the report, and then we presented the final report to Verizon's disclosure committee for approval, which includes our head of internal audit, our controller, our chief securities counsel, and the head of investor relations. What worked well in the process and what I think is absolutely essential to do this sort of reporting is really having support from your board and senior leadership on day one. Our board was very committed to enhancing our transparency in our climate reporting and stepping up our efforts in this area. So that really helped my team get the internal buy-in that we needed to get the business involved and to have all these other groups supporting us in the effort. It's also what we found to be the biggest challenge, a company the size of Verizon, getting folks internally across so many different teams to understand what was TCFD. So we had to do a lot of education there. What are we trying to accomplish? And then, giving us our time and expertise so we could produce a really robust report. So I would say, resources are a challenge and something companies really need to think about. I'll stop there.
Great, thank you, Beth. I think, highlighting that cross-functional approach is definitely key and something I think we're seeing as leading companies have successful initial responses and disclosures in the process. And you highlighted many different functions within finance that were involved in the approach at Verizon. Turning to a different aspect of the finance ecosystem, Matt, the CFA Institute has done a lot of work around ESG integration overall and is now working on a report specifically about climate change. Can you talk a little bit about how the CFA Institute is approaching climate change disclosure?
Sure. We are approaching it generally the same way we approached ESG and focusing on materiality. A couple of years ago, we decided to partner with PRI and did a pretty extensive report on ESG integration around the world. And we went all around the world. I think we talked to 23 different meetings and 17 different countries. And that came out with 4 different reports we put out starting 2 years ago. One of which was case studies on ESG integration, about 33 case studies. and then a regional breakdown of what's going down in each region, the Americas, EMEA, and APAC. And we thought, following up on that, we should do something on climate because it's the biggest issue in ESG, and we haven't talked about it a lot specifically. And we're focusing in the same way on what's material, educating our members on the fact, the fiction, what is climate change, what are the economic implications you need to think about, some of the tools you can use, such as scenario analysis, and some of the standards such as TCFD and SASB are the ones we're focusing on because they focus on materiality and it's a kind of a short, sweet way to look at things. The TCFD is 4 different aspects you look at and is helpful for companies or investors who want to engage with companies, looking at the governance, looking at the strategy, looking at the risks and opportunities and the metrics. And we think that's a good way to frame it. The plan is to have the reports come out the last week of September. When we were planning to do this, we thought, our society in New York is going to have an event on Climate Week, as they always have, and we'll present the report at the in-person meeting, Climate Week at the end of September. That's tentatively still the plan, but we'll see. But the report should be out end of September and it's mostly an educational tool for members on understanding climate change and how investors are what are best practices. We're also going to have 10 case studies that help people understand how investors are doing it in all practicality.
Great, thank you. And just a quick reminder to the audience, we welcome your questions. We see a few coming through the questions function in GoToWebinar, so please submit your questions throughout the panelist discussion. Matt, focusing a little bit on that investor interest conversation, which you just referenced, and really the primary focus towards materiality. I know y'all have been trying to do at the CFA Institute some research and understanding specifically on investor interest in climate-related disclosures. Is there anything you can share from your insights in that process?
Yeah, as part of the report that I spoke about, is a survey of our membership, our worldwide membership, and so that's come back. We're still just kind of in the process of going through that data now, and so you'll have to wait for the report to get all of it. But some of the general trends we've seen are something we saw similarly when we did a similar survey on ESG a couple of years ago, and that's that investors understand this is an important issue. They're not getting as much demand on climate than they were on ESG as broadly. It's more pronounced in Europe than it is in APAC and the Americas. But one of the big things that comes out is there's a concern that there's not the data out there that they need as analysts to make these decisions. And when we ask them, what kind of data do you want? Do you want the price on carbon? Do you want this or that? They mostly wanted strategy companies talking about how is baked in or not baked into strategy. And so that gets into what the TCFD tries to do. One of the things they try to do is an understanding of how this is in or not in the conversation of strategy, because they can tell then, is this something that the company's taking seriously, planning for, looking at the risks and opportunities and measuring themselves.
Great, thank you for that overview. And linking to that investor interest, I know, Beth, when we've spoken before, you've talked about really one of the key drivers for Verizon's report was understanding what investors were looking for. Can you maybe describe a little bit about your engagement with investors on the topic, how it's informed your approach, and maybe building into that, we did get one question in the chat about the duration and the time that it took y'all to go through the process for your first report. Maybe weave that in as well, if you could.
Sure, happy to do that. Right, so we decided to start enhancing our ESG reporting first with the TCFD report, because climate disclosure is really one of the first things our major institutional and socially responsible investors requested from us. And we first started getting requests, I would say about 18 months ago. So our process started then. It took us maybe 8 months to do the actual reporting, but it started much earlier. We spent a lot of time with our investors before we made a lot of decisions about how to report, where to report, and what to report. So, I know everyone has gotten the open investor letters to the CEO or the board, but we also engaged directly with several key investors very early on to make sure we understood what they thought would be most useful to them in terms of climate reporting from Verizon specifically. And we were really transparent about our planned approach, the themes and areas we plan to emphasize, and generally the thinking behind our scenario analysis that we were considering. And we also were very open about sharing our challenges with them in order to set expectations up front. It really helped that so many of our investors early on in the process were vocal proponents of the TCFD aligned reporting framework. In the past, I think Verizon felt slightly paralyzed by the lack of consensus from our investors regarding what reporting would really be decision useful for them in this area. And so once we had kind of a consensus about TCFD, it really allowed us to put the resources behind that effort and move forward. It was also very helpful to have our investors agree up front that they thought a focus on the resilience and efficiency of our network were themes they would expect to permeate our reporting. And in terms of the scenario analysis, those conversations really gave us an opportunity to explore our thinking as to why we made a choice to conduct our initial scenario analysis that focused around transition risks, in particular contemplating the impact of a carbon policy. One thing I would note is that we found our investors to be very collaborative in these discussions, and I really wouldn't shy away from having them. One of the best conversations I had was with an investor who was working himself on producing their TCFD report, and they were having real issues integrating climate risk into their traditional risk reporting framework. And that conversation and some others that followed really helped me and my team to relax and understand that everyone recognizes their reporting and resource challenges. Our investors are going through it too, and that we may not be perfect in every area coming out of the gate, but that's fine. It's just the start of the journey that all of us are on, and our investors really encouraged us. Just because we didn't think we could do everything perfectly didn't mean that we shouldn't take the plunge. So we really found those conversations on the front end to be very, very helpful.
Great. Thanks for that overview of the investor engagement. And you mentioned earlier also your coordination with the head of IR at Verizon, as well as talking about your connection and work and collaboration with the wider finance function at Verizon. I know your recent appointment to serve as Chief ESG Officer at Verizon is helping look at and leading a cross-functional team that focuses on strategic areas and including climate change disclosures. Could you just talk a little bit about your kind of engagement with the Verizon CFO, Matt Ellis, and other members of the finance team, specifically on how to respond to climate issues?
Absolutely. So yeah, last fall, our board requested that we create a dedicated ESG team, and my position grew out of that. And part of the team is dedicated to sustainability reporting and stakeholder engagement on ESG issues. We also have subject matter experts on strategic areas like governance, human rights, digital safety, and environmental sustainability. Part of that is for purposes of stakeholder engagement and to drive various initiatives across the business. But part of that is because I work very closely with Matt Ellis, our Chief Investment Officer, regarding how we set, measure, and report against our ESG commitments, including our climate-related goals. So, for example, our CFO and our Treasury team are working to procure partners to fulfill our renewable energy goal to source or generate renewable energy equivalent to 50% of our total electricity usage by 2025. Part of that effort is negotiating virtual power purchase agreements, and the Treasury team is largely responsible for that and reports on progress to the Finance Committee of the board. We've also worked very closely with the Treasury team under Finance to launch Verizon's first green bond and to produce the required reporting that goes along with that. At the end of the last year, we had allocated about $500 million of net proceeds to things like renewable energy projects, energy efficiency, and green buildings. And so that involves a reporting function as well. And as I already mentioned, we obviously support the investor relations team and work with them to include, climate messaging and resiliency messaging and earnings slides or investor day materials or other things like that. One of the less obvious ways that we work with finance, and I wanted to point out on this call is, one very helpful thing that team has done for us is to leverage their expertise and experience concerning reporting processes, procedures, and controls. So, as we move toward more robust ESG disclosure, we've become very focused at Verizon on making sure that we have the right controls in place relating to ESG data and reporting. My team has partnered with the SOX experts, for example, in finance to help us work through controls and processes that might be adapted for ESG data and reporting. And we've really found that perspective to be invaluable as we're trying to take operational data and make sure that it's, of a reliable quality. And of course, I also partner with Matt and his work as a member of A4S, which we've both found to be very useful in terms of identifying best practices that other companies are adopting and that we can consider for Verizon in-house.
Great, good to hear, and thanks for that overview. I think your comment, particularly on internal controls and finding ways where finance can work with sustainability or other parts of the organization to help kind of leverage their core competency and skill set on things like systems and controls is definitely key to improving the data for everyone. Blair, I know at Ceres, again, you work with a number of different companies on climate issues. What has been your experience of seeing maybe finance team engagement?
Yeah, absolutely. Definitely, as I said before, with TCFD and with investors really pushing on this issue a lot more, we have seen the finance function get a lot more involved and in a lot of different ways. I think I would say, the core of the finance function, when I think about those groups, any company that wants to do a green bond obviously has to get buy-in from their treasury team. In a lot of cases, there is a little bit of learning and, new process that has to be implemented there, as I'm sure Beth knows. And I think that's only going to grow. There's tons more working with many of the largest US banks. They are really keen to get more climate-focused, ESG-focused products out there, whether it's ESG-linked loans, whether it's transition bonds, SDG bonds, all those kind of things. And, you really have to be able to work with your treasury team, or if you are a treasury person, that's definitely something that, is a key role for you. On the financial reporting side, I think, I saw a question in the chat that, why are some of the disclosures we're seeing in the 10K and the 20F really not looking that great? A lot of cases, they are pretty boilerplate. And I think this is why. When you get your financial reporting team involved, rather than just sending them some language or, working with kind of legal to primarily do that disclosure, when the financial reporting team is involved, I think it makes it a lot easier to really have decision useful disclosure, even in your financial reports, and start actually discussing the issue in your MD&A and in your risk management section, rather than just listing as a risk factor, which is what we see a lot of companies do. And then the last kind of key, and you already talked about it, is the assurance side of things. I think that's an area where there's a lot of room for improvement. And Matt mentioned data challenges. I think that's a role where internal audit can really come in and say, where do we have confidence in the data? Where don't we? And how can we kind of improve that? And so I think on the core, that's it. In terms of investor relations, corporate strategy, risk, capital planning, all the kind of more finance related parts of the organization, they're also doing a lot. And when you look at the TCFD, would just point out that like over half the recommendations must involve your risk function. It's all
Right.
critical there. So in terms of something that people don't necessarily think of as being part of finance, if you're not a finance person yourself, risk is an absolutely critical team.
Great, thanks, Blair. And so that, as we think about the finance professionals of tomorrow and the certified financial analysts of tomorrow, I know CFA Institute has been doing quite a few things in preparing and training those future leaders around a number of different topics. How would you describe maybe climate change as an issue being brought in those training and development programs?
Sure, happy to. Just first off, I was looking through the chat as well, and I saw someone asked about something I mentioned before about what definition of materiality are we using when we talk about materiality. And it's generally the SEC definition that SASB uses, what a reasonable person would think, the information a reasonable investor would need to make an investment decision. You can get, that's not the technical SEC definition, but it's something to that effect. But that's what we're talking about. And I think that's one of the things that I think makes SASB a good resource is when I started looking at this stuff in governance years ago, we were looking at hundreds and hundreds of pieces of data to try to suss out what mattered, what drives performance, what's material. And over the years, 20 years later, we think we have a pretty good starting line, I think, through SASB and TCFD as well. But SASB, that's kind of their reason for being, is the SEC materiality definition. And so I think it's a good resources, not just climate, but ESG in general, to start from. Now, you and I may disagree on this piece of material is data is material, this piece isn't, but for the most part, it's a good starting point. As far as education, there's really three different kind of ways we educate our members and investors. Anything we do is free to, on our website is free to anyone except the curriculum, of course. And I'll start with the curriculum. I hope that a lot of people on this webinar have been tortured in the past by the CFA process. I have myself. I got my charter in 2003. And when I got my charter, ESG wasn't in the curriculum. Interestingly enough, I was working at a governance firm, and governance came into the curriculum the year after I got my charter, which made me very upset because I thought, oh, there's something I wouldn't have had to study, but now it's in the curriculum. And ES of ESG followed soon after. And now my understanding is the curriculum team, I'm not part of the curriculum, so you can't blame me for the torture you went through. I had to go through as well. But the curriculum team is now integrating climate into that process as well. So curriculum is one. The kind of work I do, the advocacy work, we do large research papers on a number of different topics. Currently we're doing one on climate, is another way. And so a report will come out, we'll write a report, we'll market that report, we'll talk to media and other influencers, we'll go to conferences and talk about these reports. We'll work with our societies on these reports. And then that's the kind of the third way is we have CFA societies all over the world. If you're in generally a city in the US, you have a CFA society there. And around the world, it's usually large financial centers. For most countries, there's a Japan society or a South African society. But in the US and Canada, they've been around so long that it's usually your city, like New York will have, I think, 10 to 13,000 charter holders who are part of these societies. And so if you're in a large financial center, especially, there's a lot of programming that these societies put on, and especially larger societies, New York, Chicago, London, Hong Kong, and so on. You'll have at least one or two ESG events every month, and more climate events. The Climate Week report, the Climate Week conference I was talking about in New York at the end of September. This is the third year they're doing it. The first year it was 1 day. The second year it was 2 days. And now they're making it 3 days just because of demand. The Boston Society has an ESG event in November that's growing each year as well. And so the societies, I would encourage people, if you're interested in these kind of things, look at the societies in your cities. They're not just, the programming there isn't just for CFA members. And then look at and then things are more immediate. And then a project I'm working on, it takes a while to get going, and then the report is coming out in September, and then down the road we'll be doing more work on these kind of things as well. And the curriculum is really the slowest lead time. It's just The process they go through is very, it's very daunting and impressive. And they kind of put together the curriculum for a test kind of a year in advance because of just all the process it has to go through. Think about they have to ship that test all over the world and do the logistics of all of those kind of things. And the test was usually in June. It was postponed, of course, this year to December, the level 1, 2, and 3 exams. But so if the curriculum for that was going to be this June exam would have been finished over a year ago. And so the curriculum, I don't know if climate is in the curriculum for this exam or the next exam, but it's either last exam, this exam, or the next one is where climate will make its way into the curriculum.
Great, thanks, Matt. I guess, building on that, talking about the CFA societies around the world, TCFD is a globally driven set of recommended disclosures. Can you share any thoughts or how you've seen the different use of TCFD, maybe by investors around the world?
Sure. What we're seeing is what we've seen in the survey, and I mentioned a little bit before, is the adoption of TCFD and the use of TCFD is more prevalent in EMEA in Europe than anywhere else. And there's a couple of resources I've seen of if people are looking for good examples of reporting. Look at the Verizon report, of course, and others who have done it. But the FRC in London put out a report late last year, and you can just Google it and find it. The TCFD, and I think they have a couple dozen examples of what they deem as good disclosures around the TCFD framework. And EFRAG in the European Union, I don't remember what that stands for exactly, but they're talking about the EFRAG report, EFRAG. I think it was earlier this year, there's a couple of reports, and they put out, and it's just in PowerPoint presentation format, about good disclosures according to the TCFD framework. And of course, the TCFD itself has a knowledge hub, I think they call it, on their website that has a lot of the same kind of stuff. And in our report, we cite a lot of these kind of things. But you start looking, you'll find a lot of good examples.
Great, yeah, and the TCFD Knowledge Hub, great resource to see some examples around the world of what's happening. We are getting some great questions through the chat, so thanks for sending those. We'll try to answer those in some of the conversation. I know one was around, does this apply to public or private companies? TCFD is intended for really useful disclosures for investors, so the key aim is for public held companies, but with that said, I know a number of different private organizations that are applying the TCFD framework themselves because they also recognize the need to better understand climate risk and opportunities. So it's definitely not exclusive. Blair, if we wanted to focus maybe specifically on the financial services sector, we've also gotten a few chat questions about that. What are you seeing specifically around the financial services sector in their reporting?
Yeah, absolutely. So as in most things climate related, the US is behind Europe in this sector in terms of disclosure. But things are starting to move here. 3 of the largest US banks, Citi, JP Morgan, and most recently Bank of America, have released standalone TCFD reports, and there's a lot of good stuff in there. And I think overall the sector is moving. I think on the opportunity side, you've seen from Goldman, JPMC, and others, huge moves towards sustainable finance, like hundreds of billions of dollars, probably totaling more than $1 trillion between all the large banks. And then on the risk side, environmental social risk management standards that are getting stricter, especially with relation to the highest risk fossil fuel investments such as coal and Arctic oil and gas. So I think we've seen some promising signs, but there's a lot more to do. And I think with respect to TCFD, for every company, that's how it has to be. It has to be an iterative process where, no company is going to get everything on the first try. Would flag in the reports that have come out, Citi did a great job of describing the methodology around their scenario analysis. And that's something I would encourage all companies to do because, even if your analysis isn't the final word, talking about how you got to your conclusions can really give investors a lot of information. And then with Bank of America, they're the first US bank, at least major US bank, to kind of try and take a crack at looking at their entire portfolio and saying, how much of our total committed commercial credit exposure is exposed to climate risk. So they had a nice graphic in their report on that I think can be a building block towards things like measuring the carbon intensity of lending and investment. Scope 3, I saw a question about Scope 3 in the chat, and for the financial sector, that's a really big challenge that folks are just trying to get their heads around. And then also moving towards, more quantitative risk management. I think, just saying, all right, well, we can't do Arctic oil and gas because it's too risky is step one, but really being able to get down to the asset level, or at the very least the company level, and say, should we be lending to this company? Should we be lending to that company? Because, all companies are not created equal, and just kind of doing things at the sector level isn't going to be enough long term.
Great, thanks, Blair. And I think, as you mentioned, this is definitely an area of increased shareholder interest. They had the JP Morgan Chase vote earlier this week about their disclosures, which is very close. I think we're seeing continued movement in questions, particularly with the financial services sector, about how they understand and evaluate their material risk and exposure. Beth, I guess, as we start to work towards wrapping up here, one of the comments within the Verizon TCFD report was that the disclosure was really the initial step in your journey, and something you'll continue to evolve in the future. Is there anything you can share about where Verizon's headed next with how they think about climate change and disclosure? I think maybe you may be on mute, Beth.
Sorry about that. Yes, I was on mute talking to myself. So we just launched our annual ESG report yesterday, which is significantly expanded from a disclosure perspective as well. And I saw there were a couple of questions about, whether certain things maybe go in a TCFD report or your corporate responsibility or ESG report. Someone asked about the UN Sustainable Development Goals. We pull that into our ESG reporting and talk about how our environmental goals further the Sustainable Development Goals. That's just where we've chosen to do that. It's not a required thing by any means, but that made sense to us. Anyway, so I think for us, the first next step really is that we plan to gather stakeholder feedback on both the TCFD report and our ESG report once our investors have had a chance to kind of digest them, so that we can take into account their comments and thoughts as we plan for next year. I know right now everyone is still in the middle of proxy season, so it's not a great time to engage on the new reporting. I think this summer will present some good opportunities to do that. A couple of other next steps leading out of the TCFD report are to incorporate the theme of network resilience into our messaging, and to really educate all of our employees internally about the report at a high level, and also to give kind of basic governance, oversight, and management of climate-related risk and opportunities to make sure that employees generally understand those concepts. We're working on a series of internal webcasts for different employee groups to educate them about the framework at a high level and walk them through the broader themes. And we're doing a series of videos as well. I think it's a great opportunity to educate all of your employee base, and it also makes, I think, further reporting easier. And as we've talked about with that cross-functional nature, it's just essential. And so, while our report really is for a specific audience and purpose, we're always working to find ways to kind of help our employees, customers, and other stakeholders connect to the broader themes to tie everything together. So that's really one of the things we're focused on going forward.
Great. Thanks, Beth. And I know your report is available on the Verizon.com website. So, anyone in the audience, if you're interested in seeing that report, please go to the website. It's available for anyone's review. Matt, I guess wrapping up, going to where the CFA Institute's headed, you have your upcoming report and survey on climate change. Where do you see kind of the next steps in this process or journey?
Mm-hmm. Well, that's still a little bit up in the air, but I would imagine it would be more. But what exactly that's focusing on, I'm not sure. Um, we're right in the middle of doing the report now. We'll be over the summer putting through the production process and talking about, okay, what are the next things? Some of the issues that came up in the report itself. Like I said, we're doing 10 case studies in the report, but we actually had more firms that want to do case studies than we had room in the report. And so what we're talking about doing is doing more case studies around climate after that. But I'm sure it will be, whether it's looking at materiality more specifically and what that means around the world. That's a topic that's come up. Things like natural capital and human capital, those things have come up. But right now, it's a broad menu of things that we can look at. Climate itself will be something we continue to talk about. But what's the next report we work on? That's kind of a half year or a year kind of in the making kind of project. That's still to be determined.
Great. Well, we do have, as I mentioned, quite a few questions from the audience. Just trying to quickly capture some of those specific ones. Blair, one in particular is around different reporting frameworks that are out there. Where does TCFD fit in compared to SASB, CDP, GRI? Do you want to comment maybe how that works together, where TCFD plays a role with some of the other frameworks that are out there?
Yeah, absolutely. And we definitely hear from probably all of our member companies that, they're drowning in the number of reporting requests and survey requests that they get. And so harmonization in that area is really important going forward. And I think that's already happening. The new CDP questionnaires do try to align with TCFD. SASB as well is trying to align all of their stuff. I think one thing I would mention on SASB, and I saw another question about how companies are kind of making these determinations, is that SASB is also looking at what companies are saying about material issues when they're putting together their materiality maps. So I've heard some companies say, oh, SASB says this is material or not material for my sector, so therefore it is or isn't. And I would just caution folks against that because they're working off what companies have disclosed on each of these issues. And then I think, with respect to GRI, it does serve a different audience, a broader audience than just investors. And so we tend to think that remains critical. And, it is a bit different from the investor-oriented ones, but wouldn't want companies to lose that, because it does provide a broader range of disclosures than some of the others.
Great, and just another note on that as well is both SASB and the CDSB, the Climate Disclosure Standards Board, have come out over the last year with some really good case studies and examples of TCFD reporting and disclosures, and try to identify what are some of the best disclosures that are out there based on the recommendations. So that material is available on the SASB and CDSB websites, and it's a good reference. Beth, we've gotten several questions around scenario analysis, and that's usually cited as one of the more challenging aspects of the TCFD reporting process. And I know you referenced using a consultant to help you with that process earlier. Can you maybe just talk a little bit more about how you went about that, what you looked at, and kind of the frequency or planned frequency for performing that type of analysis and review?
Sure. Yeah, I see one of the questions here is kind of what kind of consultant would you use? We used one of the big four accounting firms. We used a sustainability team, and we don't typically use consultants in my ESG team, but I will say I think it was invaluable here just because it was the first time that we were doing this, and we really needed advice on what scenarios made sense for our industry, for our business. Should we be looking at transition risks, physical risks, and we wanted to make sure we chose scenarios that were kind of digestible, that resonated to a broad range of stakeholders, And so I will say, I think it was really necessary for us to have some outside help with that on the first go around. And also, frankly, just from a resources perspective, it is an undertaking, and you're trying to do that along, right, with everything else. That kind of feeds into one of the other questions I see here about how often should you perform this. So it's interesting. I've had a couple of investors actually ask us what we think. I think no one is quite sure about the answer to that. What I'm hearing from most people is they think, maybe every third year makes sense to conduct a scenario analysis. I think that we'll have to see how that plays out. I've also had investors ask me how they should be engaging on the scenario analysis. I think no one's exactly quite sure, how to talk about that. And I think that is going to be an area that just develops over time as more and more folks start reporting, and people have kind of more to look at, more to think about. But we would not be anticipating doing a new scenario analysis next year, since we just did one this year. But I do think, there will be kind of a regular cadence on which that needs to be refreshed.
Right. And then within that scenario analysis and some of the findings from it, right, I know there's a lot of focus on energy prices, energy consumption, energy use at Verizon, and increased use of renewable energy. Is there anything, there have been a few questions around, just how do you think about energy consumption and use going forward? Anything you can share around your own renewable goals, or what came out of the process as you think about energy consumption?
Sorry, I was on mute there again. Apologies. So, yeah, I mean, one of the things that we really saw with our TCFD reporting, frankly, is it helped us think about, how to talk about our climate goals, because previously, I think, we set a lot of great goals. We have a renewable goal. We've got a carbon neutral goal as well. And I don't know that we talked about them in terms of kind of how they're helpful to our long-term business strategy. And so, as we think about our 2035 carbon neutral goal, we're really focused on kind of moving from older technologies to newer, more energy efficient ones, kind of migrating from copper to fiber, installing kind of energy efficient systems, employing energy management best practices, working on cooling techniques, investing in green energy, and are very focused on, as I mentioned, virtual power purchase agreements. So, I do think it's important on this path to make sure that you're thinking about how to talk about your various climate-related goals and how they really do further your long-term sustainability and help you mitigate risk. And so, that is one of the things that came out of this, is we really tried to kind of integrate our goals with our risk mitigation strategies as well.
Great, thank you. And then, maybe the final question, we've seen a lot around, the questions around valuation and materiality. Blair, I think, do you want to chime in on kind of some views or experience you have and options around valuation and how investors are thinking about that?
Yeah, I saw, a whole bunch of questions about, stranded assets in the oil and gas sector, metrics to determine, materiality of some of these issues, about how to make sure we're measuring the right things, and that we're measuring, the risk of climate change economy-wide, as opposed to, just tiny little pieces of it. And so I wanted to say that is an area where finance teams have expertise that might not exist elsewhere in organizations. And there is a need for, I think, a lot better valuation of these risks and opportunities. I think if what's measured gets managed. And so, in a lot of cases, there's, option pricing methodologies could be, as one example, a way to think about these kind of long tail risks. something that's unlikely but would have a massive impact on companies if it happened. Value at risk analysis is another commonly used credit metric that really could be adapted to a lot of ESG type shocks. So would encourage all finance folks out there to volunteer your expertise on valuation, because sustainability teams who aren't finance professionals probably aren't thinking about it.
That's right, and that's a great note to end on. Definitely there's a lot of again core competencies by the finance team that the sustainability team has not understood or may not be thinking about, and that's where we need the help of all people within the finance community to really help organizations better address these climate change risk and opportunities. That's going to wrap it up for today's session. We hope you found it to be a useful reference in understanding the critical role that finance plays in responding to climate-related risk and opportunities, and the increasing focus on the topic by investors. There's a wealth of material out there that's available to help provide guidance to you through the websites listed on the screen, A4S, CFA Institute Ceres, and then again, the Verizon TCFD report itself is a useful reference to see what a report can look like. Thanks again for your participation today, and we'll go ahead and adjourn the session. Thank you.